Based on the historical data and forecast, Bitcoin exhibits a fluctuating trend with a recent pullback. The RSI consistently remains above 50, indicating a bullish sentiment, but nearing the oversold level recently. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential buying opportunity. Considering these factors, I propose a strategy focused on capitalizing on potential rebounds. We will implement a buy strategy when the price touches the support level of $62,500. The stop loss will be set slightly below the support level at $62,200 to mitigate potential losses if the price continues to fall. The initial target price will be set at the resistance level of $66,100, aiming to capture a significant portion of the recent upward movement. To refine this strategy, we will incorporate a trailing stop-loss mechanism. Once the price reaches $64,000, the stop-loss will be adjusted to $63,500. Further, when the price hits $65,500, the stop-loss will be moved to $65,000. The final target price will be set at $67,000, allowing for additional profit potential if the upward momentum continues. This combined strategy leverages RSI, Bollinger Bands, and support/resistance levels to maximize returns while managing risk effectively. The entry price is $62,500, stop loss is $62,200, and the target price is $67,000. Based on the historical data and forecast, Ethereum demonstrates a generally upward trend, bouncing between the support of $1,790 and a resistance of $1,950. The RSI fluctuates, indicating periods of overbought and oversold conditions. The Bollinger Bands show periods of volatility, with the price occasionally touching the upper or lower bands. Considering these factors, I recommend a combined strategy leveraging RSI and Bollinger Bands. Initially, we'll implement a long position when the RSI dips below 20, indicating an oversold condition. The entry price will be $1,840. A stop loss will be placed slightly below the lower Bollinger Band, at $1,730, to limit potential losses. The target price will be set at the resistance level of $1,950. To refine this strategy, we'll incorporate Bollinger Band signals. If the price touches the upper Bollinger Band, we will take profit at $1,970. If the RSI remains below 30 after the price touches the upper Bollinger Band, we will hold the position with a revised target price of $2,000. If the RSI rises above 80, indicating an overbought condition, we will consider taking partial profits at $1,940 and setting a stop-loss order slightly above the upper Bollinger Band to protect gains. This combined approach aims to capitalize on both momentum and volatility, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, BNB shows a downtrend with a support level at $565 and a forecast price consistently below $568. The RSI consistently stays below 80, indicating the asset is not overbought. The Bollinger Bands show the price moving towards the lower band, reinforcing the downtrend. Therefore, I recommend a short selling strategy. Entry price will be $568, with a stop loss set at $575 to limit potential losses if the price reverses. The initial target price will be $557, based on the forecast. To refine this strategy, we'll incorporate the RSI levels. If the RSI drops below 20, indicating an oversold condition, we will hold the position. If the RSI rises above 80, we will close the position and take profit. The portfolio will be 60% short selling, 30% waiting for the RSI to reach 20, and 10% waiting for the RSI to reach 80. This blended approach leverages both the downtrend and the RSI indicator to maximize potential returns while managing risk effectively. Based on the historical data and forecast, XRP has shown volatility but is currently trending downwards. The forecast predicts a continued decline over the next week, with prices ranging from $1.09 to $1.02. Considering the RSI values, which have fluctuated between 41.1 and 57.3, the asset is neither significantly oversold nor overbought. However, given the downward trend and the forecast, I recommend a short position strategy. we will enter a short position at $1.09. The stop loss will be set at $1.14, just above the recent resistance level, to protect against a potential upward reversal. The target price for this short position will be $1.04, aligning with the lowest forecasted price. To refine this strategy, we will incorporate the Bollinger Bands. The price consistently trading within the band suggests moderate volatility. If the price touches the upper band of $1.16, it could signal a temporary upward movement, but given the overall trend, it's a risky entry point. Therefore, our primary strategy will be the short position. We will allocate 70% of our capital to this strategy, with an entry price of $1.09, a stop loss at $1.14, and a target of $1.04. The remaining 30% will be held in cash, allowing us to capitalize on potential reversals or new opportunities. This diversified portfolio balances risk and reward, aiming for high returns in a declining market. Based on the historical data and forecast, Solana demonstrates a sideways trend with price fluctuations between $74.0 and $77.8. The RSI fluctuates between 43.3 and 55.1, indicating periods of oversold and overbought conditions. The Bollinger Bands show volatility, with the price frequently touching the upper and lower bands. Considering these factors, I propose a combined strategy incorporating RSI and Bollinger Bands for optimized returns. We will implement a strategy based on RSI with an oversold level of 20 and an overbought level of 80. I suggest a long position entry at $75.5 when the price touches the lower Bollinger Band and the RSI falls below 45. Set a stop loss at $74.2, just below the support price, to mitigate potential losses. The initial target price is $77.8, the resistance level. If the price reaches the resistance, we will move the stop loss to the entry price of $75.5 to secure profits and reduce risk. If the price continues to rise, we can set a second target price at $79.3, the upper Bollinger Band. This strategy combines the momentum of the Bollinger Bands with the oversold confirmation of the RSI, aiming for high returns while managing risk effectively. Based on the historical data and forecast, TRON shows a slight upward trend from July 14, 2026, to July 27, 2026, but the forecast indicates a potential downward movement starting July 28, 2026. The RSI fluctuates around 50, currently at 45.2, suggesting a potential oversold condition. The Bollinger Bands show that the price is currently near the lower band, indicating a possible bounce. Considering these factors, I recommend a contrarian strategy. We will enter a long position at $0.318, placing a stop-loss order at $0.315, just below the support level. Our target price will be $0.33, aiming to capture a potential rebound towards the resistance level. To maximize returns and manage risk, I suggest a portfolio combining RSI, Bollinger Bands, and trend analysis. The primary strategy will be the long position at $0.318 with a stop loss at $0.315 and a target price of $0.33. A secondary strategy will be implemented if the price breaks below $0.315. If this occurs, we will immediately exit the long position and consider a short position at $0.315 with a stop loss at $0.318 and a target price of $0.308. This dual strategy approach allows us to capitalize on potential upside while mitigating losses if the downward trend materializes as forecast. Based on the historical data and forecast, Dogecoin shows a slightly decreasing trend with support at $0.0692 and resistance around $0.0721. The RSI fluctuates between 31.9 and 47.4, indicating periods of oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering the current RSI around 40.1, which is near the middle range, and the forecast predicting a price between $0.0704 and $0.0719, I recommend a moderately bullish strategy. We will enter a long position when the price touches the bottom of the Bollinger Bands, which is currently around $0.0704. The stop loss will be set just below the support level at $0.0692, and the target price will be the resistance level of $0.0721. To maximize returns, I propose a portfolio combining RSI, Bollinger Bands, and trend analysis. We will initiate a long position at $0.0704, placing a stop-loss order at $0.0692 to limit potential losses. If the price reaches the resistance level of $0.0721, we will take profit. If the RSI drops below 30, indicating an oversold condition, we will consider a long position at $0.0704 with a stop-loss at $0.0692 and a target price of $0.0741. This combined strategy aims to capitalize on both short-term fluctuations and the overall trend, offering a balance between risk and reward. Based on the historical data and forecast, Zcash has shown significant volatility with a recent downward trend. The RSI consistently fluctuating between 45 and 65 suggests the asset is neither strongly overbought nor oversold. However, the forecast indicates a continued downward trajectory, potentially reaching $491. Considering the recent price action and the forecast, I propose a short position strategy. The entry price will be $501, coinciding with the first forecast price. A stop loss will be set at $507, just above the recent high and slightly above the forecast price, to limit potential losses if the price reverses. The target price will be $488, aligning with the recent low and providing a reasonable profit margin. To refine this strategy, we will incorporate the Bollinger Bands. If the price breaks above the upper band, the short position will be closed and the funds reallocated. Conversely, if the price touches the lower band, a long position will be initiated. Given the downward trend and the RSI hovering around 50, I suggest maintaining the short position for now. Therefore, the portfolio will be 70% short Zcash with an entry price of $501, a stop loss of $507, and a target price of $488, and 30% in cash to capitalize on potential rebounds. This approach balances risk and reward, capitalizing on the predicted downward trend while allowing for flexibility based on the Bollinger Band signals. Based on the historical data and forecast, Chainlink shows a generally upward trend, with support around $8.33 and resistance nearing $8.81. The RSI fluctuates between 52.5 and 64.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increasing volatility. Considering these factors, I propose a combined strategy focusing on short-term momentum and trend confirmation. We will enter a long position when the RSI dips below 30, and the price touches the support level of $8.33. The entry price will be $8.33. The stop loss will be set just below the support level at $8.28 to protect against a potential downside reversal. The initial target price will be the resistance level of $8.81, aiming for a gain of approximately $0.48. To further refine the strategy, we'll incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, indicating strong upward momentum, we'll raise the target price to $8.92. Conversely, if the price touches the lower Bollinger Band, we'll reevaluate the position and consider tightening the stop loss to $8.37. Based on the forecast, the price is expected to hover around $8.65 to $8.75 for the next week, further supporting a long position. Therefore, the portfolio will be 60% long position with an entry price of $8.33, a stop loss of $8.28, and a target price of $8.81, and 40% cash. This combined approach leverages both RSI and Bollinger Bands to capitalize on short-term opportunities while managing risk effectively. Based on the historical data and forecast, Stellar shows a downtrend with recent price fluctuations. The RSI consistently dips below 50, with values frequently approaching the oversold level of 20, indicating potential buying opportunities. The Bollinger Bands suggest that the price is currently near the lower band, which could signal a potential bounce. Considering these factors, I propose a contrarian strategy focusing on short-term gains. We will initiate a long position when the RSI falls below 35, specifically at $0.173. The stop loss will be set just below the support level at $0.169 to limit potential losses. The target price will be set at the resistance level of $0.181, aiming for a quick profit. To refine the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, we will enter a long position at $0.175. The stop loss will be set at $0.17, and the target price will be $0.188. The final portfolio will be a combination of these two strategies, prioritizing the RSI signal for entry and using the Bollinger Bands for confirmation. This blended approach aims to capitalize on both momentum and volatility, maximizing potential returns while managing risk. Based on the historical data and forecast, Curve DAO has been exhibiting a downtrend with considerable volatility. The support price consistently remains at $0.203, while the resistance fluctuates around $0.212. The RSI has been hovering between 43.2 and 60.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands show significant price swings, with the lower band frequently testing the $0.199 to $0.201 range and the upper band fluctuating around $0.223. Considering the forecast prices, which predict a sideways movement around $0.211 to $0.213, I recommend a cautious strategy focusing on short-term opportunities. My proposed strategy combines elements of RSI and Bollinger Bands to capitalize on short-term fluctuations. I suggest a long position when the RSI dips below 50 and the price touches the lower Bollinger Band, around $0.203. The entry price will be $0.203. Place a stop-loss order at $0.199 to limit potential losses. The target price will be set at the resistance level of $0.212. This strategy aims to capture a quick profit from the anticipated sideways movement. If the price fails to reach the target and instead breaks below the support level, the stop-loss will be triggered, preventing significant losses. This strategy will be re-evaluated daily based on updated data. Based on the historical data and forecast, PAX Gold demonstrates a slightly bullish trend with periods of consolidation. The RSI consistently fluctuates around the 40 mark, indicating neither strong overbought nor oversold conditions, but the recent upward movement suggests a potential for further gains. The Bollinger Bands have been narrowing recently, indicating a period of low volatility, which could be followed by a breakout. Considering these factors, my strategy will be a combination of trend following and volatility breakout, focusing on the forecast period. I recommend entering a long position at $4,060, placing a stop-loss at $4,040 to protect against a sudden downturn, and setting a target price of $4,090, aiming to capture a moderate profit. To refine this strategy, I'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, I'll enter a long position at the lowest price, with a stop-loss at $4,040 and a target price of $4,140. Conversely, if the RSI exceeds 70, indicating an overbought condition, I will avoid entering a position. If the price breaks above the upper Bollinger Band, I'll enter a long position at the breakout price, with a stop-loss just below the band and a target price of $4,140. This combined approach aims to maximize returns while minimizing risk by capitalizing on both trend and volatility opportunities. Based on the historical data and forecast, Tether Gold shows a mixed trend with periods of both upward and downward movement. The RSI consistently fluctuates around the middle range, with occasional dips below 40 and spikes above 50, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been relatively stable, with the price occasionally touching the upper or lower bands. Considering the forecast data for the next week, the price is expected to remain around $4,060, with slight variations. Therefore, I suggest a moderately bullish strategy focusing on short-term price movements. My recommended strategy is to initiate a long position when the RSI dips below 37 and the price touches the lower Bollinger Band, for example, on July 21, 2026, when the RSI was 37.3 and the price was near the lower Bollinger Band of $3,950. The entry price will be $3,950. Set a stop-loss order at $3,920 to limit potential losses. The target price will be $4,080, aligning with the resistance level and the upper Bollinger Band. If the price reaches $4,080, secure the profits. If the RSI rises above 60 during the trade, consider exiting the position to avoid potential reversals. This strategy combines RSI and Bollinger Band signals to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, PYTH network shows a slightly downward trend. The price has been fluctuating within a range, testing the resistance at $0.0452 and finding support at $0.0427. The RSI is currently at 49.4, indicating it is neither overbought nor oversold. The Bollinger Bands are narrowing, suggesting a period of consolidation before a potential breakout. Considering these factors, I recommend a cautious long position strategy. We will enter a long position at $0.0444, placing a stop-loss order at $0.0427, right at the support level. Our initial target price will be $0.0452, the resistance level, aiming for a quick profit. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the price drops to the lower Bollinger Band and the RSI falls below 30, indicating an oversold condition, we will enter a long position at $0.0427, with a stop-loss at $0.0418 and a target price at $0.0452. Conversely, if the price reaches the upper Bollinger Band and the RSI exceeds 70, signaling an overbought condition, we will consider a short position at $0.0452, with a stop-loss at $0.0467 and a target price at $0.044. This combined strategy provides a balanced approach, capitalizing on both trending and range-bound market conditions, while mitigating risk with clearly defined stop-loss levels. Based on the historical data and forecast, THORChain has shown a slight upward trend with price fluctuations between the support of $0.422 and the resistance of $0.453. The RSI values have been oscillating around the mid-range, with brief periods of oversold and overbought conditions. The Bollinger Bands have been narrowing and widening, indicating periods of low and high volatility. Considering these factors, I propose a moderately bullish strategy with a focus on capitalizing on short-term upward movements. The forecast data suggests a potential increase in price, reaching $0.456 by August 3, 2026. My recommended strategy is to enter a long position at $0.443, coinciding with the first day of the forecast period. Place a stop-loss order at $0.42, slightly below the support level to protect against unexpected downturns. Set a target price of $0.455, aligning with the upper end of the forecast range and just below the resistance level. This strategy combines the RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while minimizing risk. The RSI is currently below 80, suggesting the asset is not overbought, and the price is near the upper Bollinger Band, indicating a potential upward movement. This combination provides a favorable entry point for a short-term trade. Based on the historical data and forecast, Lido DAO exhibits an overall upward trend, consistently testing and surpassing the resistance level of $0.399. The RSI consistently remains above 60, indicating bullish momentum, though nearing overbought territory. The Bollinger Bands have been expanding, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. The entry price should be set at $0.395, coinciding with the initial forecast price and a recent test of the resistance. A stop-loss should be placed at $0.381, just below the recent support and a significant historical low, to limit potential losses. The target price is projected at $0.409, aligning with the final forecast price and a potential breakout level. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI dips below 40 during the trade, it signals weakening momentum, and the position should be closed. Conversely, if the price touches the upper Bollinger Band, it suggests an overbought condition, and the target price should be adjusted to $0.401. Combining these indicators with the overall trend, this strategy aims to capitalize on the anticipated upward movement of Lido DAO while managing risk through strategic stop-loss and target adjustments. This approach should yield high returns. Based on the historical data and forecast, Falcon Finance exhibits a sideways trend with consistent support at $0.06 and resistance around $0.0645. The RSI consistently hovers between 40 and 54, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show the price fluctuating within a narrow range, further supporting the sideways trend. Given this, a strategy combining RSI and Bollinger Bands is recommended. First, we will look for opportunities to buy when the price touches the support level of $0.06 and the RSI falls below 40. For example, on July 27, 2026, the RSI was 42.2, and the price was $0.06. We can enter a long position at $0.06 with a stop loss at $0.059 and a target price of $0.0645. To refine this strategy, we'll incorporate Bollinger Bands. When the price approaches the lower band and the RSI is near or below 40, it signals a potential buying opportunity. For instance, on August 3, 2026, the forecast price is $0.0622 and the lower Bollinger Band is $0.0565. If the price reaches $0.0565 and the RSI is below 40, we enter a long position at $0.0565 with a stop loss at $0.0555 and a target price of $0.0645. This combined strategy leverages both indicators to identify high-probability entry points, minimizing risk with tight stop losses and aiming for a reasonable profit target based on the established resistance level. The forecast data suggests a slight upward trend, which further supports a long position strategy. Based on the historical data and forecast, Pump.fun shows a generally upward trend, consistently bouncing off the 0.002 support level. The RSI has recently been fluctuating, indicating periods of both buying and selling pressure. The forecast suggests a continued upward trajectory, with prices reaching 0.00234. Considering these factors, I recommend a long position strategy. Entry price should be 0.00205, with a stop loss set at 0.00195 to protect against a potential downturn. A target price of 0.00234 can be set to capitalize on the predicted upward movement. To refine this strategy, I'll incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential oversold condition, reinforcing a buying opportunity. Conversely, when the price approaches the upper band, it suggests a potential overbought condition, prompting a consideration to take profits. Therefore, the final portfolio strategy is to enter a long position at 0.00205, set a stop loss at 0.00195, and target a price of 0.00234. This approach combines trend analysis, RSI signals, and Bollinger Band indicators to maximize potential returns while mitigating risks. Based on the historical data and forecast, LayerZero exhibits a clear upward trend. The price has been fluctuating within a range but consistently bouncing off the support price of $0.792. The RSI consistently remained below 80, indicating that the asset is not overbought. The forecast data suggests a continued upward trajectory, with prices reaching $0.92 by August 3, 2026. Considering the Bollinger Bands, the price is currently approaching the lower band, suggesting a potential buying opportunity. Therefore, my recommended strategy is a long position with an entry price of $0.868. The stop loss should be set just below the support level at $0.788 to mitigate potential losses. The target price is set at $0.92, aligning with the forecast price and providing a reasonable profit margin. This strategy combines technical indicators and forecast data to capitalize on the upward trend while managing risk effectively. Based on the historical data and forecast, KAITO demonstrates a clear uptrend with consistently breaking resistance levels. The RSI consistently remains above 70, indicating an overbought condition, but the upward momentum persists. The Bollinger Bands have been expanding, suggesting increased volatility and potential for further price movement. Considering these factors, I propose a long position strategy. We will enter a long position at $1.2, coinciding with the start of the forecast period and just above the support level. A stop loss will be set at $1.16, slightly below the support, to mitigate potential downside risk. The initial target price will be $1.48, aligning with the forecast high for August 3, 2026. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 50 during the forecast period, we will hold the position, anticipating a bounce. If the price touches the lower Bollinger Band, we will consider adding to our position at $1.34, as this indicates a potential buying opportunity. If the price reaches the upper Bollinger Band and the RSI exceeds 80, we will consider taking partial profits at $1.42 while maintaining the remaining position with a revised target price of $1.48. This combined approach leverages the overall uptrend while incorporating volatility signals for optimized risk management and enhanced returns.